Hello guys, what's up? What's up, man? It's been a while. It's been a minute. It's your boy Mr. FX. So I'm going to give update of the pairs of the week, my watch list of the week, and what I'm looking at, and also as well as my private community. So I'm going to start from the top. Uh, on my watch list, the pairs that I was looking forward to trade this week. I apologize for the noise on my background. Kids are playing around here. So we had NAS 100, which I was expecting it to drop, but actually I was not following closely on NAS 100, but that was a pair on my watch list. The problem of, you see, when you have so many pairs to watch, again, it brings confusion because you feel like you want to trade everything. You need to refine and choose what you want to trade. So this week I was not much interested in equity indices. And also commodity, I was not really interested in commodities like last week and the other week. You remember I said that I was actually concentrating on commodities alone and equity indices. So according to my pairs, so this week I'm concentrating on currency pairs and I'm not interested in equity indices as expect them to continue pushing higher. So let's look at the currency pairs. And on currency pairs, we're going to start with the pound, the GBP/USD. I was looking forward to sell it. And I'm going to give my technical point of view and also what I think about a little bit of fundamentals, all right? So we look at this is the GU, all right? This is a GU, and we'll get on my watermark. This is my GU. Previously, it had reacted from, there's a demand zone that was here, all right? Pushing higher, but technically, let me open a different broker whereby you can be able to trace it and follow it from the technical point of view. And which broker should I use right here? Let me see if I can use Oanda. Don't know if we have something on Oanda. Yeah, on Oanda, I have something here. So when you look at this market from the higher time frame, I'll just give you a little bit of analysis on this one. I'll not go into so much into details, but actually the whole point is to share the watch list, my watch list of what I'm looking at this week. So when I look at this market structure, we know that after we got a reaction from this particular zone, yeah, right? So once we got that reaction from that supply, a couple of weeks ago, or in fact a month, this was the supply zone that was there. Once we hit that supply zone, we have been pushing to the downside. And at the end of the day, this is the only place I expect to find what we call something looking like a resistance, which is also a level that's going to act as a demand zone. But this demand zone, the high chances on this demand is to create a pullback because the whole trend of the GU, we are still bearish and we are pushing to the downside. So this demand is the only level with high quality that expected to react. So this means that if you can be able to catch this sell, then you should be targeting this area, which is around how many pips? Let's see, from that zone to this area, around 900 pips. This is the only place with the high probability to create a huge resistance point. But you know that the market will keep doing this, all right, until you hit this level. Then you probably will get a bigger move before you break the zone. So from my technical point of view, this is where you should concentrate so much. This is your area of interest. So if you're watching this zone here, as you can see, according to the daily, according to the weekly time frame, the high area that the market will push back to is this zone, but technically we are not going to go back there. So we're hitting this level on daily time frame, which is a a demand, actually not a demand, but a supply zone, because from this zone we can see we don't have here inducement. Most people will be looking for inducement, but you don't need inducement because this supply already swept liquidity, as you can see, sweep of liquidity, and so liquidity is now taken out, and you don't need to wait for inducement. all right, because liquidity is no longer there. So what we just need to look at that zone, we look at it as a level of a high probability for us to sell from this area. So if the price already took out that liquidity, because this was a whole daily candle, but up there's this shadow that I wanted to see it being mitigated, and price just mitigating this shadow. All right, and started to push lower. So this means that if you can be able to go to your lower time frame and find a change of character, depending on the kind of trader you are, if you want to use what you call engulfing candle, all the entry models on your lower time frame, I like using the 15 minutes. So the problem is that I already missed the first entry on this structure, because if you look at this, we had this last break here. This was the last break of structure here. And the main low that pushed the price higher, this could be a main change of character if you're looking for a bigger confirmation. But again, this was just an immediate internal, right, change of character. And you had inducement here. Actually, this price, it came here when I was asleep, so I was not watching my chart. And you can see from this area, the area of demand was here, and you could have been tapped no, this is not a demand, this is a supply zone, and probably could have taken your trade from there. So since that the price has already left, but doesn't mean that the setup is now not active. You can still trade here on this candle. If we get to pull back to that candle, my friend, don't sleep. Take the position. We can look at this zone as for now. We can look at it as what? As a liquidity zone. All right. So if we get to push back to this particular level, then can take it to the downside. So that is your level of interest. Look at that and target where you want, right? At least your first target should be the low that pushed the price higher. I hope, where is the low? Let me see. The low that pushed the price higher, let us see, where is it? The main target when you start selling, you should be targeting this low, right? This low from the area of that demand. And in fact, I'm going to place my sell limit there. Then we'll be targeting here. That is around almost 400 pips. So that is on Euro USD, guys, not Euro USD, actually GBP USD already. That's where I'll sell from. I'm going to place my sell limit. If I get a pullback, that's where I'm going to take my position. And that's not just a weak demand that I have identified, because you can see this demand zone is still visible, or even on what time frame? Still visible even in 1 hour time frame. So it's a very good zone. You can use it, and it's going to give you a very strong confirmation, because this opposing demand here already, the opposing demand has failed. So take advantage of that. The other pair that I already took it, but I placed a sell limit last night because the price was really running from my zone, and I placed my sell limit there. So this where my position is on Euro USD. But going, since if the price pulls back, I'll close my limit and now look for confirmation, because sometimes at night when you sleep and the price just run away from your zone and you miss the setup. So I place there, and if I get to see price pushing back, because you can see on the previous record as well, the euro has been breaking the structure and mitigating the demand. You see the inducement break the structure, mitigation of the demand, higher inducement, mitigation of the demand, breaks the structure, inducement taken out. We have a change of character here. This is a minor inducement. If you like going for a major liquidity zone, we see a major liquidity is there. The supply zone is up there. Can take advantage of it. Price mitigate there, breaks the structure to the downside, and now we are completely bearish, and we are back after taking out this liquidity zone, breaking the structure, taking out the liquidity. This is a very good supply zone that we are using to sell. And let me show you why I'm selling from that zone. Is because the dollar also is mitigating a daily demand zone. The dollar As you can see, you have to mitigate this daily demand zone, and the daily is now pushing higher, which you expect it to go and break this structure. So the more it's going to push higher, the more we continue selling those pairs. So let's go back to the Euro USD. So to the Euro USD, where it is right now, I placed that sell limit, but I'm going to close it so that I wait for clear retracement, proper move. So I'll go to 15 minutes. As I've said, I love 15 minutes is my favorite time frame. So when you look at this setup, here we can actually see that the last break of structure to the upside is there. All right, and that's not a break, actually. This is a liquidity sweep. This is a liquidity sweep, and here we have a very clean change of character. Here. Now that we have a very clean change of character, you can see we have liquidity, which is an inducement there, right? Have those levels there. So if we can pull back around this zone, let me see. I want to see that zone from a higher time frame point of view so that I don't take a low setup. Yeah, this is a very nice one. But the problem is that this setup has two levels. We have another zone at the extreme. That's why when I saw this, I happened just to place my entry here and stop loss there so that I want to take advantage of the two zones. If the price stops me here and goes down, well and good. If it pushes back to here and puts me in, well and good. So in fact, I'm not going to close that position. That's the sell limit that is there. Now, once we have that, we want to see it pushing lower. And as you can see, my main target on this particular setup, I was targeting this low, but this is not the target. I want to see this price pushing back to this actually monthly demand zone that is here. So if I get to see this pair pushing back to this level, I just want to be activated. Then I let it run up to this low, which is around 680 pips, which is not bad. If you get to capture that as a good swing position, and fundamentally, we are overvalued when you look at the dollar. So the other pair that I'm interested in was NSD USD. NSD, all the pairs that are affected by the dollar directly, they are pairs that I'm watching them closely. Are pairs, this is a time you need to pass your props. So the problem when I look at this particular pair, let me open a different broker. The problem that I go to this NSD USD is it has not mitigated the supply zone that I wanted. So to me, this is a pair with the low probability. I want to get everything mitigating a zone. So when you look at the GU and the AU, they're mitigating the zone. And even if you look at their futures as well, if you look at their futures as well, they are all mitigating the demand zones. I mean the supply zones. Let's look at it. As you can see here, these are very, very nice supply that has been mitigated, and we are pushing down on the euro real chart, the real price of the euro. So when you come back to when you look at the pound as well, the pound is also mitigating, and this is the real price of the GBP USD, you see, hitting that supply zone, and I was expecting it to push where? To push to the downside, and this is what you can see on the GU. Let's look at the GU, which is GBP USD. You can see that's also the margin being mitigated. The other pair that I was looking at is this supply zone on the EU, Australian dollar. I find it difficult. So when you come to the Audi USD, the level has not been mitigated, and so I'm not interested. So I'm not interested because even the supply zone that I was looking at has not been tapped. This means that this pair will give me a headache. You can see we are not activated, and this drop to me is not a drop I want to put myself into. So those were the pairs. Actually, on the USD card, there's a little bit difference there. The USD card did not come to my areas of interest, though we had mitigation of this area earlier. I hoped that it will push back to this level, but it has not. And you know what happens? The factors, considering that the crude oil is falling, so you have to understand how crude oil affects Canadian dollar. So the other pair, guys, that I'm looking at is what pair is this? Okay, I'm watching the crossing pairs. and I had a setup on NSD card, but since it has failed to mitigate my supply zone, I wanted to sell it from here, but it has not mitigated that area, so I'm not interested to sell it. The other pair that I want to see to drop is the Euro card. And man, if you remember my post on TikTok, check it out and splitted. And this one, I have to really explain this one. Okay, let me explain this one. So when you look at this pair, the Euro card, I'll go to a weekly time frame. Sorry for that. Let's switch to the weekly time frame. There's a lot of information, a lot of ideas on this setup. So when you look at this one, we know that the Australian the Euro card was has been hitting the supply zone and pushing to the downside, hitting the supply zone and pushing to the downside. I think my internet's a little bit laggish, so I'm not really, it's not gonna push. Okay, now let me just pick it from here. We can see that the last time we pushed high and took out this level as an inducement, as a liquidity there, we mitigated this institutional supply here. Once we hit this level, we started pushing lower, and eventually price took a lot of time here. You can see dropped the downside, but did not manage to do it, to go higher after mitigating this the block here, which is a demand zone there. Price pushed high again. So when price has been pushing high, you can see it did not break that level. Look at that. This was the supply, which was from this other side. Institutional supply, you can see it. Price mitigating there, went lower, went higher again, and later on, prices started pushing lower to take out this. Let me show you. I'll do this. You look at this market structure. Price was pushing to the downside. Sorry, what is it? You look at this. You can see from that particular supply, price created what you call inducement, major liquidity, like that. And this was the inducement. This was a major liquidity, that was the supply zone. Price went high, mitigating that zone, and was supposed to continue pushing to the downside and breaking this particular low. Let me open a monthly time frame so that I give a clear picture of this, because I think that one is not just enough for you. This pair has a lot of data, a lot of idea. And as well, if you wish to join our community, you can always reach out. My contact is on the description section. You can also join our Telegram community, our WhatsApp community, and get to interact with the other members. So this is the monthly time frame. And we can see on the monthly time frame, this is the Euro card. We can see the Euro card, it has been creating pullbacks. You see this was the minor inducement, took out inducement, mitigation of this zone, failed to break the structure, mitigation, like that, and went higher. So what do you learn from this? This is a pullback. All of them are just liquidity zones that we need to do away with. This is just something like this. The price needs to come lower, collect this liquidity, and probably tap into this zone before we get a major push to the upside. So this was a major liquidity zone. So price started pushing to the downside. You can see liquidity takes out liquidity, something like that goes high and push to the downside. So once we mitigated that supply zone there, we can see the price has been trying to do it to push lower. Now that the major liquidity was taken out here, we left this area that is unmitigated, that demand zone there. So we can see after mitigating this level, price went higher, mitigated this supply, again came lower, swept the liquidity, and you can see after sweeping the liquidity, we had a very nice, very nice demand zone here that was supposed to be used. But when you look at the behavior of the market currently, where the market is, price just came down, swept liquidity, pushed higher, so left again this demand. So we have this particular demand zone here, and we have this one here. But we know that the momentum of this market is not bullish. The market is not bullish unless we break this high. If we get to break this particular high, then we'll be going higher. But the fact that we took out liquidity, we pulled back into this area of supply, and now we are here. So the price came lower and is pushing back there, but I'm looking forward to see this pair drop back to the monthly demand zone, which is, guys, if you get to capture this, which is around for almost 5,000 pips, man. What do you want? I have to take advantage of this. Unless otherwise, I have to take advantage of this. Anyway, let me open in so we get to see the market into details. The whole candle, the whole supply zone was this candle. From the monthly, got tapped, price went lower, mitigated this demand zone, went back to the upside. So let us, sorry for that. Let's go to the weekly time frame. Open that structure to a little bit clear zone. You can see mitigation of this zone, price pulled back to that supply zone that was there. This supply zone is more visible on daily. So let me go back to daily, and you can see now, guys, this is my supply zone that the price, after taking out this liquidity, pushed back there. Price activating this zone, I'm really looking forward for a massive drop on Euro card. And what is the reason? If you know the law or the rules of the base and the quote, you're going to understand that the Euro, all right, I'm giving you a clue, the Euro has hit the supply zone. The Euro is going to be weak. The Euro, because there's something I was teaching my student this yesterday, and I was just giving, let me just give you a picture of this so that you guys don't say this guy was not saying things clearly. Let me try to say this here. This is a Euro card, as you can see on my watermark there. The Euro is the base. The card is the quote. So what is happening here? The card, all right, which is the quote, if it's weak, the Euro will always buy, all right? But again, if the Euro becomes strong and the card becomes weak, the Euro will buy. So what is happening here? For the market to go down, if Euro automatically becomes weak, the card has to take over as a sell. And man, let me take you to this side. Let's look at the card. Let's look at the Euro first alone. When you look at the Euro has hit a supply zone, which Euro is supposed to drop. So we expect the Euro to drop. So Euro being the base is going to be weak. So let's look at the card. Where's the card? Let's look at the card. Guys, if you get to understand how these things works, you're going to enjoy. You're going to enjoy looking at the chart. What the fuck is this? The card is also weak. The card is dropping. But the card has not done what I wanted. I wanted to see this card mitigate this particular supply zone where the leg out on this market structure, which is here. That was my zone. But I wanted to see this card. Let's just wait a minute. Wait a minute. What the fuck was I doing? The whole zone is here and the zone has been mitigated, my friends. So what is happening? Why is it that I never saw this? Why is it that I never saw this? This is an awesome setup. The Euro has hit the supply zone. The card has hit the supply zone. Putting the Euro and the card together, the Euro being the base, which means that it should buy, and the card being the quote, which means that it's weakness. We buy strength, we sell weakness, which means that Euro card is going to sell. Anyway, that's by the way. So once I get this information with me, once I have this with me, knowing that the Euro is going to drop and the card is also going to drop, so the Euro card is going to be automatically a very nice drop. So let's go to the Euro card setup. And not just the Euro set, anything paired with the card is going to drop. Anything you pair with the card is going to go down. Look at this. I wait for this to go down. GPP card, where's the GPP? We have talked about the NSD card. You see, we're starting to drop, but I don't like the way it's dropping because it has not taken the zone I wanted. So to me, that one is a low probability setup. The GPP card is here. I want to see it go down as well. GPP card, it's on my zone. I think this was my zone of interest here. So let me see. Yeah, this was my zone of interest. But if this zone is not marked, then maybe I have my own reason. I can see a bigger zone above me. Maybe that is a weekly zone. Don't know. But I really look forward to see this pairs pay falling to the downside. So Guys, let's look at an example, a Audi card, just an example, because I want to see this pair go down. Just example, let's say a Audi card, is it falling? Because the logic behind this concept is you need to understand the base and the quote. And you can see, guys, this was a analysis that I did and even I forgot about it. I don't have forgot about these setups. This is a problem of analyzing most pairs, and you end up even forgetting this. Let me see if I can be able to jump in this trade with the confirmation on my lower time frame. So, man, what the hell is this? This pair played out well. It gave all that it had to give in terms of confirmations. We can see, and guys, this is my confirmation that I love, my favorite confirmation. If you look at this is an inducement level, right? This is an inducement level whereby the market pushed higher to the upside, a pullback, the downside, higher to a supply zone, and boom, that is one of the best confirmation. We could have sold there, stop loss above there, and price, since that we have broken this structure, this setup is still valid, guys, and don't miss it. I want to have a valid break of structure here, and if I get this break of structure, boss, where am I putting my entry? Let's say this will be my liquidity, which is an inducement, and this is my favorite supply zone. And let's look on the left. This was another supply zone that was here. It's mitigated. So this is a wall zone, a wall imbalance zone, which is around how many pips? Which is around 12 pips. If the price pulls back here, guys, better take advantage of this. If we push back here, take advantage of that move and sell it to the future. Let's see, where is it? Where do I want to see it go? From this area. What the fuck is this? Okay, we should just target somewhere, maybe here, or maybe here. All right, somewhere, because we are bearish. Because we are bearish. So, guys, I think that is what you can take advantage of that. So let me show you something else. I was looking at what pair am I trading? I'm taking this pair here, and this pair, I think I'm also bullish into the Swiss franc, GBP CHF. Actually, I took that position there, and this one is a pair that I want to be bullish on, and I think this market's not really playing out well. Putting me in the trade, I really want to see it push higher, but it's not. So I'm not even at break even. I'll put my stop loss at break even and let it run, because I see that the pound has hit a supply zone, and the Swiss franc, where's the Swiss franc? The Swiss franc, as we can see, it is also dropping. Need to see it from the daily time frame. The Swiss franc, yeah, the Swiss franc happened to mitigate my point of interest, that zone, and I had another zone up there. So if the Swiss franc is gonna fall, then the GBP/CHF is likely to fall. So I need to close this position immediately. Immediately. Though this was a demand zone that president react from, but anyway, I need to close that position from my understanding. So guys, thank you for your time, and I'll see you in my next video. If you want to join us, remember my contact is on the description section. See you next video, guys.